What can we expect from the real estate market in Northern Virginia in the first half of 2025? Should we rush to buy a property or should we wait? Hello, my name is kamaliaemerson. I have been an associate broker licensed in Virginia, Maryland, and Washington, D.C. since 2000. Today, I will share my real estate market forecast for the counties and areas of Northern Virginia where I have primarily focused my business as a realtor. My forecast is based on the analysis of the sales dynamics in the past several months and potential changes that may take place now that the new administration has plunged into work. Let's start with what was the key event affecting the real estate prices last year, and that is a housing shortage. The demand for housing well exceeded the available supply. As soon as a house was listed for sale, an immediate frenzy would follow. Multiple offers would come in, and a bidding war would lead to an increase in the sale price of the property. In fact, in Northern Virginia, the housing market exemplifies the classic dynamics of supply and demand, with a pronounced shortage of available homes leading to an increased competition and rising prices. We witnessed a sharp increase in prices, sometimes up to 10% or even more. What has led to the gap between supply and demand? This area's strong job market and proximity to the capital of the country attracts a steady influx of residents, sustaining high demand for housing. Additionally, Northern Virginia's economy remains robust, further fueling housing demand. A smaller number of people have been putting their homes up for sale. They don't need to move closer to work, as many are working remotely, or it simply isn't financially advantageous for them to move to a smaller house or to a distant location, especially since the new mortgage rates of more than 6.5% would be significantly higher than the 30-year rates they locked in a few years ago or refinanced just when the rates were ridiculously low, 2.5% to 3%. This is particularly true about the situation pre-retirees and empty nesters who would normally downsize have found themselves in today. Now, they would not be able to achieve the expected results of downsizing, elimination or reduction of mortgage debt, freeing cash for retirement, using the equity from selling a larger home to invest in other priorities like healthcare or travel. Another driving force for a higher demand is limited new construction, particularly higher density housing options that could somewhat alleviate the shortage. President Trump's coming to office may have a noticeable impact on the real estate market. During his election campaign, he promised to revive the economy, lower mortgage rates and lower cost of housing, expand housing supply, and much more. However, I have doubts about some of his statements, especially considering that the consequences of certain changes may contradict each other. For example, raising tariffs will definitely increase prices, resulting in a higher inflation rate, and the inflationary pressure will unlikely prompt the Federal Reserve to decrease interest rates as well. Tariffs on materials like steel, aluminum, lumber increase construction costs, making new homes even more expensive, and higher housing costs can lead to a higher demand for financing, which will put upward pressure on mortgage rates. All that could affect the real estate market dynamics. There are also worries about the consequences of a mass deportation of illegal immigrants who have been involved in some sectors of the U.S. economy, including construction business. A mass deportation would mean reduction in the number of cheap workforce and consequently slowing down of the pace and volume of new construction and further jeopardizing an already weak supply in the market and further raising the inflation rate. One more recent initiative of the new administration on funding freeze to assistance programs and grants may have implications for the U.S. housing market too. The suspension of funds could lead to layoffs, and affordable housing developments depend on federal grants may face delays and cancellation. All of that will likely exacerbate existing shortage of housing units, and in any event, the freeze has already introduced uncertainty into the housing market. And now a new announcement regarding an offer of buyouts to federal employees so that they do not return to work. Plus, President Trump's idea about privatizing Fannie Mae and Freddie Mac. How will that impact the market? So based on the current events and my observations, I anticipate that in the first half of 2025, we will still continue to see an upward trend in prices, albeit a more moderate one. High prices may be expected with respect to single-family homes in desirable areas like North Arlington, McLean, Vienna, and parts of Falls Church and Alexandria. With the arrival of spring and a warmer weather, we can expect an increase in sales, as is historically the case. And even now in winter, offers are coming in the first 3-5 days of a house being on the market. So the other day, I was surprised to see that one of the least attractive houses I showed recently has received an offer too. So, and the location of that home is far from ideal at that. Most likely, in a month or two, more or less decent properties will receive 5 to 7 offers in the first few days, especially if mortgage rates slightly drop, say to 6.3, 6.5%. It's important to note that many are cash buyers in today's market, even when it comes to properties over $1 million. My forecast for the upcoming months is as follows. In Fairfax and Arlington counties, the total number of listings on the market will increase by about 7 to 8%. Prices for townhomes and single-family homes may rise by 5 to 7%, while I expect condos to see an increase of about 2 to 3%. Here I'm referring to condos that are not new construction with modern layouts. From my observation in Loudoun County, which is particularly appealing to young couples, prices are expected to continue rising, likely by 5% or more in the first half of the year, primarily due to a housing shortage. I believe the overall sales volume may not reach pre-COVID levels, and mortgage rates are likely to gradually decrease to around 6 to 6.25% by the end of the year in the best case scenario. A lot will depend on whether the new president will be able to fulfill the promises he has made and the reaction of judges to lawsuits that will continue pouring in to try to stop Trump's executive orders. It is obvious that there are quite a few younger people and first-time buyers out there who are not spoiled by the incredibly low mortgage rates of 2.5 to 3% we had during the pandemic. Also, there is a high demand for housing from those moving to Northern Virginia from other states. Therefore, the housing shortage will not cease to exist. My advice is to always consult with a realtor when buying a property, as he can share his insights into the price dynamics in specific counties and neighborhoods over the previous 2-3 months, which is very helpful in making a realistic and yet winning offer as soon as you see a property that meets all of your criteria. If you like my posts, please subscribe to my channel and leave a comment. I wish you the best of luck in making your real estate dreams a reality in the wonderful state of Virginia.